Welcome back, everyone. It's been a week off since I did a last update, and this is a bit different in terms of updates. I was doing weekly for a while, took a week off, came back with this one, which is a bit different. I'm going to talk about a few more things than I normally talk about in the updates, because there's been a few things on my mind and a few things that have me, I don't know, frozen, torn, basically. I'll get into what I'm seeing and why I'm hesitant at this point. So basically, by the end of this video, I hope that I will have articulated my thought process in why I'm currently kind of stuck or frozen at this point, because there's a number of areas that I will go through here that are both positive and negative at the same time. And so I really don't know. So when I look at the data, and this is a very technical term that I'll use, it sucks. Growth is just not doing well. It's decelerating. There's a bunch of bad numbers all over the world. Now, am I saying there's going to be a recession? No, and that's not what I'm saying. I'm saying that growth still kind of looks eh. But at the same time, it seems to me when I look around at the different sectors of the market. You could look at bonds, you could look at different copper, whatever commodities, and you can kind of see that it looks like the deflationary fear, the deflationary impulse has kind of peaked and it seems to be rolling over. So basically, inflation kind of picking up. So, well, what does that mean? Normally, that means that you'd want to buy things that are inflation adjusted, or that make money when there's inflation. I've been talking about this in a number of videos recently where things like commodities and energy generally would do better, relatively better in this type of environment. That being said, those areas have not done super well recently, and they've been down, well, down a bunch on the year. So I'm not sure if tax loss season, which is coming up in the next, well, month and a half, 2 months almost, could push them even further. So there is an additional risk. And the other risk is, well, like I said, growth still doesn't seem to be super yet. And this leads me to my thought process on what I call beta problems. So I don't know if it's just me that calls it. I think of it as beta problems. Beta is basically moving faster than the market. If you have a high beta stock, like tech stocks, for example, uh, they could move faster than the market in a given direction. Generally, copper, for example, is a high beta way of playing the market at times. Now, you look here and you have the market, which seems to be super psyched about this endless endless ending trade deal. I don't know how you want to call it, but I think that's mainly BS. Not that it's ending, but that the fact that if it does end, then that suddenly markets should roar to 4,000. I don't see that as being the primary thing. But the point is, the S&P is at its all-time high. Sentiment is very bullish. We're kind of, I don't know, you look at the sentiment indexes and we're really pushing it. We're pushing it and we looks like we should feel like should be getting a pullback. So if I'm right about the higher beta things, maybe the energies, maybe the coppers way of them performing right now, but I'm also right about the market being due for a pullback, then I have no idea what to do because one is saying buy, the other's saying don't buy. And so the point is, if I'm right, I'm wrong, and if I'm wrong, I'm wrong, and I'm right. You know what I mean? Hopefully you're following. Um, So yeah, but to be clear, I'm not saying we're going to crash anytime soon. I'm just saying I don't want to get too long here at the all-time high with this much bullishness floating around. And I don't really generally comment about like the general markets too much. And the reason why is my thoughts on the market in general is okay. So yeah, it's expensive historically. But I would personally be kind of terrified of shorting. Why is that? Uh, and here's the most, I guess you could call it defeated bull or unenthusiastic, sorry, defeated bear or unenthusiastic bullish argument that I can think of. But it's the one I keep thinking of. And that is that there will be more money in the future. That is basically the most likely thing in all of finance that I can say. There's going to be more money. Where will that money go? Well, whether it actually goes in the real economy or not, it, historically, when there's money, it eventually finds its way into financial assets and stock valuations and some well assets in general, and that is why I cannot, in good conscience, short markets. Now there is a tricky little mess here when it comes to the US dollar because the Fed's not QE or whatever they call it has looked like it has weakened the dollar a bit. Now, if I'm right and inflation picks up, well, their easing might stop. But if their easing stops and everyone else's easing continues, then I think it's very real that you can see the dollar again start causing problems for the world. Now, until that happens, um, we can get this commodities rally, let's call it maybe. And it's a longer term question of like, will the Fed stop and will they reverse course? Because for the time being, it looks like, well, they keep saying that they've stopped easing, but the point is, I'm saying there's inflation, looks like there's inflation. I'm not saying that the economy's fine. Very different things. And the one thing I did say, or not I didn't say it, they said it. Well, they made it sound like they said it, and that is that it will take really off the charts type inflation for them to ever raise rates again. They didn't say it like that, but that's what it sounded like. So on to gold, because I always say something about gold. And realistically, leave it to me. I'm sorry, gold bulls. I'm really sorry. For 2 months, I've been saying basically, oh, gold's still at 1500, gold's still at 1500, and it's been going up and down and up and down. And, you know, all those times, we always get to the weekend and I'm always like, yep, it's still at 1500. Take 1 week off. As I said, I'm sorry, gold bulls. But my point is on gold, we're reacting to every little trade war over BS comment. And my point is that I never thought that the trade war mattered much for gold, and I don't think that it being over would affect the economy that much. But the point is, I don't know why everyone else bought gold. I said this a few weeks ago, and so I really can't pile in more at this point. I kind of want to see how this whole thing shakes out. And in addition to that, you have if I'm right, again, that let's say you see copper and steel and commodities start turning up and you just see um, inflation and but people read that, oh, everything's fine. Everything's fine. And if everything's fine, again, some people might look to sell gold. So, yeah. And then you have that as a potential near-term question. In the longer term, though, if the Fed is actually terrified of ever raising rates again, then I think eventually gold will do fine. But for now, I don't know. I virtually never talk about bonds, but today, why not? Really don't see the point at this point. Like, I get it. I see the point of bonds within a portfolio. I just don't see the point of buying bonds at this point, like with this prices, with these yields. I get it. There's some people that say, bond yields will go to zero or negative, and that's fine. But the point is that's betting on the price of bonds increasing by someone else doing something that wouldn't make sense to me. And realistically, if you're just going to buy a bond and hold it, you're making nothing. You're making less than what the Fed hopes that inflation will overshoot. So, it doesn't make sense to me. Now, that being said, um, if my view is right about inflation in the near term, I would think that TIPS would outperform long-term treasuries. But again, if we're going to be looking at TIPS being a long-term smart investment, we first have to look at how how they factor in inflation being measured. And is that right over the long term? And I don't think so. But, if you do think so and you like the yield on tips, then I'm not saying don't buy it. I just talk about what I think. I don't tell you what to do or not. But this is why I don't talk about bonds. I have a long rant and I might do it someday, but yeah. So this view that I'm talking about is more of a short to medium term view. And long term, it's a whole different picture. That being said, um, once said to someone that I think long term is just a whole bunch of near term stacked on top of each other. I'm sure someone smarter has said something more relevant or better, but that's just how I think of it. And in terms of, is this the bottom for energy? Is this will copper not go any lower? I have no idea. I don't know. There's there's a whole bunch of questions in terms of what will happen in the next 6 months to provoke what happens next. And I don't have a magic crystal ball. I don't have a time machine. Be nice. That would be nice. I digress. Anyway, I don't know, but I know that long term, of a number of those sectors, such as oil and copper, for example, the supply and demand, there hasn't been like investment in supply, and demand is slowly growing. And that being said, when you look at things like copper and oil, a whole bunch of the demand has to do with global economic growth. So, because I can't predict that, it becomes harder to predict going out a while what the picture for those would look like. Like if there's a global recession, then the price is probably going down first. But if there's not, and things kind of scrape along and then reaccelerate, then this could be the bottom. I don't know. Now, there are some other things like uranium and some other things that are less focused on macro, sorry, general economy. So there are some interesting things. But, as I mentioned earlier, I think that as long as the Fed keeps the dollar down with their easing or with their not QE or whatever the heck you want to call it, then, you know, who knows? And there are a number of things that I've discussed on this channel that I do like over the long term, and I still like them. But my point was mainly with this video is that despite there being certain sectors that are really interesting or I'm invested in or I'm happy to be invested in or whatever, at this point right now, I'm not like in a huge hurry or a huge rush or itching to really deploy cash into new sectors. I may be slowly adding to some that I have. I may be looking to see if something that I think could get cheaper. I'll put it on my watch list and uh, keep an eye on it. But I'm not in a hurry to throw money at the market right now because, well, basically, if I'm right, I'm wrong, and if I'm wrong, I'm right, and I have no idea what to force money into in this environment. So anyway, everyone, that's kind of where I'm standing at the moment, what I'm thinking. I hope you found something interesting or could point out where I'm absolutely wrong. It's always good to know. But the last final point that I'm going to make in this lengthy video is that I'm already kind of hedged because I'm already more heavily into certain areas like gold and uranium that if I'm right, could do well. I mean, obviously, if I'm the whole point of this video is if I'm right, I could be wrong also. But so I'm happy to be sitting with cash. Anyway, hope you enjoyed, and until next time when there's a video that you may enjoy even more. Um, have a great day.